day earlier this morning. Had to call everybody and wake them up and say, get your butt out of bed and go log in to the presentation because we're going to cap out and you're not going to be able to get in because that's the way GoToWebinar works. It sometimes won't even let the speakers in once we cap out. So I want to thank all of our presenters today. Let's go back and look at the list in total. We had Rob Hoffman, Price Headley, Todd Gordon. You just heard from a good friend, Andrew Keene, who is Chicago born and hanging out in sunny San Diego right now, lucky boy. We've got 3 speakers left, Josh Martinez, Larry Gaines, and John Seville. John Seville just woke up. He's actually in Australia right now, and it's 4 a.m. there, so I said, get out of bed and go log in. Okay, so let's just get back to where we are. Josh Martinez is with MTI, Market Traders Institute. They're down in South Florida, and I don't know if you've ever heard Josh speak before, but this guy, when he comes on here, totally catches my attention and holds it the whole time. Very, very good presenter, gives you excellent trading ideas that you can take away with you today. So let me go ahead and let him take over because we're running a couple minutes behind now. Josh, I'm going to give you until 2:17 Eastern. You'll get a full hour. Let's see. There you are, Mr. Martinez. I'm going to make you the presenter. If you'll please just remember when you sign out not to end the presentation because that means everybody gets kicked out. Oh, there's your PowerPoint. Give me an audio test real quick.
I want to go ahead and say thank you to Jeanette and Trey Thirsty for giving me an opportunity to speak today. It's always a pleasure to be a part of these type of presentations. We do have some world-renowned traders who are really great educators as well. Before we get started, can everyone do me a favor? Can everyone just type in a yes, just confirm you can hear my voice? I just want to make sure the audio is working properly. Just type in a yes, you can hear my voice. Okay, perfect, perfect, perfect. Thank you, Perry. Thank you, Susan. Thank you, Wayne. Thank you, Brad. Today you're about to discover a few things, how to control your emotions, how to discover the power of mentorship, and gain confidence in the overall Forex market. I do represent Market Traders Institute. We will be discussing and talking about more towards the end of our Chiefs Trading Room, but the biggest thing I want to do is make sure that everyone thoroughly understands the trading opportunities leading into 2016 and going over routine. As always, before we get started, it's very important to understand that there is risk involved in trading the Forex market. You should never invest money that you cannot afford to lose. Understand that we are not CTAs, which stands for Commodity Trading Advisors. Basically, we're not money managers. We're not here to trade for you, but we're here to educate you. We'll teach you methodologies that have been working for well over 21 plus years here at Market Traders Institute to put you in a position of empowerment so that you can make your own decisions. Now, quick question. For those of you who are in the room, can you just do me a quick favor? How many of you are current Forex traders? Type in a yes if you're a Forex trader. Type in a no. I just want to see who makes up the room. So type in a yes if you're a Forex trader. Type in a no. Frank is, let's see, Edward is, Tom is not, Tabor is, Chris is not, Greg, Robert, Bo is, Stephen is not. Okay. Not a problem. For those of you who are not, hopefully this is going to be a fantastic education for you. Hopefully you pick up some tips and tricks and see the opportunity inside the Forex market. For those of you who are, what you can do is you can take the information that we talk about from the Chief Trading Room and you can apply it into your routine or maybe see a different routine, which is always a great thing. Keep in mind that we are entering into the last 2 weeks of the year. Typically, trading does slow down. The Forex market is open 24 hours a day, opens up on Sunday, 5 p.m., then remains open 24 hours, which it closes on Friday at 5 p.m. So it's open 5.5 days a week. Towards the last 2 weeks of the year, it does slow down. It does close during New Year's as well as Christmas, so keep that in mind. For those of you that do not know who I am, let me introduce myself. My name is Joshua Martinez, and I am Market Traders Institute's product expert. I personally trained tens of thousands of investors worldwide. I've also taken a $500 US initial deposit investment, generated over $39,000 US profit from it. I'm a published author, international speaker, professional analyst, full-time trader as well, as I'm known around the Forex community as FX Pathfinder. I became a Forex mastermind. I've been featured in FX Trader Magazine, Equities.com, Forex Crunch, Executive Trader, Your Trading Edge, Trader Planet, Trading Pub. Some of you may have already attended some of my London Daybreak sessions, or the latest, which has been the the Forex Daily Outlook videos for the social media. That's always a fun thing. But many investors always ask the big question of, how much money can you make inside the Forex market, and how much do you need to get started? Well, in front of you, you can see an account activity statement where we started this trading account with 500 US dollars, and we started applying some methodologies within about a year and a half of investing and taking all the profit that we made and reinvesting. And of course, when we had the opportunity to put more money into the account, a year and a half later, started seeing returns of $4,500 a trade, $2,500 a trade, $3,200 a trade, making upwards of $7,500 a trade. The neat thing about that track record, it is third-party verified. You can see it's a 4,548.82% return on the initial deposit investment. Since then, we've done a lot of work with charity. Every October, we like to open up a $10,000 trading account. All the money in which we make, we donate to our local charity. In this scenario, we had 108% gain. Here's a picture of myself donating the charity to breast cancer awareness to Florida Hospital Pink Army. Really great foundation. Thoroughly enjoy donating to them. Now, I'm trying to be quick with this intro because I only have an hour and I want to make this very content heavy. I just want to make sure that everyone understands that the information that we're covering today really does accomplish the end goal in mind, which is to generate a profit. Here's Thomas S. Knew nothing about the Forex market. He came in, applied some simple methodologies, made 4,500 US dollars his very first week. Here's Anthony S. He's an MTI student as well. Took him about 30 days to get a return on investment, stuck with it. Now he receives or generates an average of 3,000 pips a month. Many investors ask the question of, well, I only have $8,000, only have $5,000. What can I do with that realistically? Well, in October, we just took an $8,000 account and just said, what can we do in 2 weeks? Because with the added volatility, we were able to generate 3,255 US dollars in just a 2-week period. Just to kind of give you an idea of what could be the immediate return on the investment. And the neat thing about this is it doesn't matter if you are young or old, or if you never traded before, or if you're a seasoned investor. The methodologies in which we teach here are pretty straightforward, and hopefully you're going to be able to learn from them today. We will be looking at routine today, a routine in which has allowed Peter Cook, which has generated over 754 pips in a single position. The neat thing about that is that's with a standard position, or about a $2,000 to $3,000 investment per trade, has about 7,540 US dollars. So pretty decent return on the investment and pretty decent in regards to end goal in mind. So let's go ahead and jump right into the live market. Let's put your success at the center of everything that we do. Let's show you how this is done. And for those of you that do not know what the Forex market is, I'll start out with putting you in a position of success by determining your different lot sizes. Okay? Because Rich already asked a great question, says, hey, what is a pip? Okay, so we'll start out with the Great British Pound Australian Dollar. And I'm going to answer that, Rich, in just a moment. What we're looking at, these are called Japanese candlesticks. And these measure price interest points over time. And these candlesticks represent 1 day of trading, so about 24 hours. And what we do is we measure price movement inside the Forex market and values of pips. PIP, or price interest point. Now, for those of you that do not know what a pip is, we're going to explain to you what it is right now, but I need you to use your imagination a little bit. I want you to imagine that you have $1 US in your hand, and I want you to imagine that you break that $1 US, and now you have 100 pennies in your hand. So 100 pennies equals $1 US. $1 US equals 100 pennies. Now I want you to take one of those pennies, and I want you to imagine that you could break it the same way. One penny would equal to 100 pips. 100 pips equals to 1 penny. Very simple way of explaining it. Do me a favor, type in a yes if you understand that a pip represents a fraction of a penny. 100 pips equals 1 penny. 100 pennies equal $1 US. Perfect. Thank you, Rich. Thank you, Frank, Perry. JJ, and everyone else. Okay, now that's what we're measuring in regards to strength or weakness against one currency pair versus another. This just so happens to be the Great British Pound versus the Australian dollar. We're measuring market movement or strength and weakness in fractions of pennies, or known as pips. Now, your value of what a pip is worth much more than just a fraction of a penny, and it's these lot sizes. So I need you to write this down so then we can all be on the same page. There's what's called a micro lot investment, and this means when you invest an average of 20 US dollars per trade. It's an average. Some is going to be more, some will be less, depending on what your leverage is and where you live on the world. Now, this means one pip is equal to an average of 10 cents. Then you have what's called a mini lot, where you invest an average of 200 US dollars per trade, where one pip is equal on average to 1 US dollar. And then there's what's called a standard lot. Now, standard lot is where we see the biggest change in someone's financial life, both for the positive and for the negative. So you have to make sure you're growing at a respectable rate and what you are able to do with your skill level and equity management. This is when you invest an average of 2,000 US dollars per trade, and to where one pip is equal to 10 US dollars. Do me a favor, type in DONE, D-O-N-E, into the question section box when you have all three of these written out. Just want to make sure that you have these. What you can also do is on the upper right hand side there is a nice little camera button. Now on that camera button what you can do is you can click it and it will take a snapshot of this and it will save it to your computer so you can view it for later. It saves you a tremendous amount of time. If you don't see your camera button you can always press escape and it will make your window a little bit smaller. Okay, and so the reason why I want you to type out your different lot sizes, and so when we measure opportunities, so for example if I say hey this market just fell 1,200 pips, or we have 1,200 pips of opportunity, you can do the math. Now, what I mean by that is, if you look at 1,200 pips, you can say, well, with standard position, that's $12,000. With a mini lot, that's $1,200. With a micro lot, that's 120 US dollars. Okay, so let's make sure that everyone thoroughly understands exactly what they're doing in regards to trading the Forex market. And the biggest thing that I want to make sure is everybody has routine, because one of the biggest challenges that investors have is when they turn on their charts, they're kind of like, where do I begin? Go ahead and type into me, ME, if that's you. Type into me if you feel as if when you turn on your charts, you kind of scratch your head and you're like, well, you know, what currency pairs should I focus in on? What time frame should I focus in on? What market condition are we in? What strategy should I pair up with this market condition? And so on and so forth. It's one of the big struggles. Many of you advanced traders, you have your routine down, and that's how you're consistently profitable. But for those of you who are just starting, or for those of you who have been struggling, it's probably because your routine hasn't been finalized yet. I'm going to go ahead and go over a routine with you that's going to assist you both emotionally, because it's going to build a tremendous amount of confidence. You're going to see the mentorship aspect, and then you're going to have a really strong trade plan, have confidence inside the market. We're going to focus on the Great British Pound Australian dollar first. We're going to go through the routine. I know that there are a lot of active traders in the room, and then what I'll do is request currency pairs from you so you can see that the routine can be applied on many different currency pairs. So we're going to go ahead and focus in on the Great British Pound Australian dollar first, and we're going to look at the monthly time frame. Now, we look at the monthly time frame for a very specific reason, and that's to find direction. Okay, it's extremely important. I want you to really think about this logically. The more logical you can be inside your investments, the better off you are. Now, you may have the very best strategy in the entire world, but if you're trading in the wrong direction, you're going to lose money. If you have the worst strategy, I'm talking about you just randomly jump in. If you just jump into the right direction, you're going to generate some income. Sure, you may go through a little bit of drawdown, but you hold your trade and it will eventually go your way. So finding direction is probably one of the most important things that you can do besides having a good solid equity management plan. Now what we're going to do is we're going to heavily rely on current patterns, market conditions that are going to repeat themselves. And we look at the Great British Pound Australian dollar, we're going to notice a couple things. We're going to notice how this market currently is making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And one of the things that we want to do is we want to look at this current pattern and we want to see the overall methodology on it and say, what is this doing? What is this trend doing? Well, number one, it's not moving in a straight line. It's making higher highs and higher lows on the way up. And number two, there's a very strong pattern that shows the major highs and the major lows are forming inside of the same areas. Do me a favor, type in a yes if you can spatially see and visually see the market is forming major highs and major lows on the same price points. This is pattern recognition, and this is going to give you that ability to have the confidence of understanding percentage-wise where the market may or may not go. What this basically means is that if this market continues on this current trend, which has started back in 2012, December 2012, the next stop is going to be this level of past resistance becoming future support. So what we're going to do is we're going to go ahead and make sure we stay with very clean charts. We never want to leave dirty charts or too much analysis because it can cause trading paralysis and confuse a tremendous amount of investors. Now remember, on the monthly time frame, we're specifically looking for the following U-turns. We're looking for areas in the market where we can find future resistance, which is future support, future highs, resistance, future support, which are future lows, and of course, Fibonacci D extensions, or D extensions. Now, write down this price point if you can. This is gonna help you out tremendously. This high is 2.0027, 2.0027. That's our target. Now, we've been utilizing the Great British Pound Australian Dollar. I don't know if you're on our email campaign or whatnot, but if you receive emails from us, you probably heard of what's called the pound drop. And back about 5 months ago, the Great British Pound Australian Dollar fulfilled a 1.618D extension. We called the sell high, and we've been selling high ever since, and we're looking to profit take at 2.0027. Thus far, the market has fallen around 2,000 pips. We do have some opportunities left. Not 2,000 pips worth of opportunity, but definitely worth enough to wet our whistle. What I mean by that is this. If I bring out our calculator and we calculate the current price points from where we currently are now to where this market may go, we're at 2.0741 minus 2.0027, 714 pips. There's 714 pips left to our target. If you trade a standard position or an average pip size of $10, that's $7,140 US. We are anticipating this to fulfill itself within 4 to 6 weeks. So let me just ask you a simple question. Okay? Type in a yes into the question section box if you would be happy making $7,000 US in the next 4 to 6 weeks. Basically, what I'm asking you is, if all this presentation did for you was allow you to make $7,000 in the next month, would you be happy with that? If all this 1 hour time with you and me did was allow you to make $7,000, would that be worth investing your 1 hour? Many investors say yes, some traders say no. For the traders who do say no, just keep in mind we are talking about just a $2,000 investment. If you invest $4,000, you could double this. This would be $14,000. So keep that in mind. For those of you who are looking for a higher return, you can always invest more depending on your proper equity management. Okay, so here's the routine. The routine is we have our direction. It makes logical sense. We were at a high price. The market's moving towards a low price. We have identified, based upon the current market pattern, the highest winning percent next move is going to be the market's going to touch this red level. Why? It's been doing it since 2012. Now, whether it's going to break below this red level or bounce back above, we don't really know yet, and at this point in time it really doesn't matter because we're not taking that long of a position. We're just looking for the rest of this move to capitalize on 714 pips. Now that we have direction, what we need to do is we need to identify, is it time? Is it time to enter in? We call this the stop light. Many traders are running red lights, which means they're getting in too early and they're messing up the trades. And so how we combat that, or how we identify this information or know if the light's red or if it's green, is we just drop down to a smaller time frame. We will work with multiple time frames simply because it does help us see the forest in a little bit more of a detailed manner. So what I mean by that is the big picture, the monthly direction is down, where every candlestick represents 1 month, and we do have about 714 pips of downward movement. When we look at the daily time frame, you can see that the current downtrend is a little bit more organized. And with this organization, it will allow us to put a little bit more structure and find a little better equity management trades. Do me a favor, type in a yes in the question section box if you can clearly see the current downtrend and the market is making lower lows and lower highs. And does it logically make sense as an investor to try to sell high? Sell high, sell high, sell high on the way down. If you're a Forex trader, you already know that you can sell high first and buy low second. If you're not a Forex trader, that's completely fine. You are able to sell high first, buy low second, which basically means you can make as much money when the market goes down as when the market goes up. So this has been our trade plan for the last 4 to 5 months. It's been very, very profitable. And when we look at the daily time frame, all we're really focusing in on is this. Is this market moving from a high price to a low price, or is this market moving from a low price to a high price? And if you look at this just for a moment, you can see the current trend that it is making lower lows and lower highs, and bears are currently in control. You can clearly see that the market, as of right now, is moving from a high price to a low price, which does give us confidence that we are in the middle of an extension and that we can begin to sell this market with higher confidence that the market's going to push our direction. Okay, so we're going to go ahead and make sure that we're cleaning up our charts. We have our analysis. We have the overall trend. We're going to be adding in what's called a convergence, which basically means more than one reason why the market's going to do something. We do like additional confirmation, and one of the things that we do like to utilize is what's called a counter trend line break. And basically what we do is we measure the retracements with just a trend line. It's something that everybody can do. And when or if the market closes below the counter trend lines, it does signify a higher winning percent push. And so you can begin to see here with this simple entry strategy that when or if the market closes below these blue lines that measures the short-term moves, you can see that the market is extending. So you can see broke below the counter trend line, a little bit of a test, but did extend. Counter trend line break, extension. Counter trend line break, extension. Counter trend line break, extension. What this counter trend line break does for you is it really assists you and really helps you begin to prevent yourself percentage-wise from getting in too early. Again, many traders know where the market's going. They just get a little bit too excited and they jump the gun. So with using this simple novice methodology, counter trend line break, we're expecting the market to fall. Now remember, we are in the middle of the extension. We are going to utilize what's called Fibonacci's. Now we've automated our Fibonacci's to where you don't have to manually draw them one by one. We are patent pending since this is a software which we created. And so, which basically means not available anywhere else but here. And so we do have this auto Fibonacci that tells us we're at a 618 retracement, and D extension will be the 1.618, which basically means the market has a high winning percent chance to form a low at 1.99750. But that just confirms the market's going to fall. That just confirms that there's no early target in front of us. We're still going to go after a very specific target. Write this down. We're going to fine-tune our target. 2.0050. 2.0050 is going to be the target. That's where we're going to look to limit out. Limit. 2.0050. The reason why we want to look to limit out there is if you look over here towards the left, you can clearly see. Do me a favor, type in a yes if you can see this big old high. This is called past resistance. This past resistance is going to equal future support, which basically means that more than likely this market's going to hesitate at 2.0050 and it may even go back up early. And so closing out just before this level or at this level is always a very highly intelligent thing to do. So now that we have our overall market movement, we have direction, we understand that we're moving from a high price to a low price. Let's fine-tune the opportunity. 741 minus 50, 691 pips, 691 pips is equal to 6,910 US dollars of opportunity. Now it's time to trade. Now, we like to enter in on the smaller time frames, such as a 1-hour time frame or a 2-hour time frame. The reason why is we like to find small risk. Trading is all about managing your risk. How much do you have to lose? How much are you willing to lose? How much are you willing to make? But focus in on risk first and then profit second. When we look at the 1 hour time frame, the goal here is to find trades that have risk of less than 100 pips. You can already see that structure has changed. You can already see the market did a great job making higher highs and higher lows. Beautiful. But now we're making lower lows and lower highs. Bears are currently in control. We're not really focused in too much on Fibonacci's on the smaller time frames. We're not really focused in too much on trend lines. Since the daily time frame has told us we're moving from a high to low, we're more focused in on entry. Okay, trying to find those great high points to sell, sell high, sell high, sell high, sell high type of scenarios. Sell there, sell there, sell there, sell here. Don't sell now. The reason why we do not want to sell now is because market is too low. The market is too low right now to sell. We've already extended quite a bit. Remember, the market's going to move in waves, lower lows and lower highs, lower lows and lower highs. We're better off waiting for the market, equity management-wise, to either extend and then we get on the next sell high, or if the market is going to be forgiving enough, it will pull back and give us a high price. When it gives us the high price, we'll utilize a counter trend line break to get in. And then here's the trade plan. Okay? And let me delete these other arrows so there's no confusion whatsoever. The trade plan that we can apply starting on Sunday when it opens up on 5 p.m. Eastern Time, entry. We're waiting for the market to give a sell high price. Then need a counter trend line break bearish, looking to sell. Stop. Stop will be as simple as placing 15 pips above high of U-turn, which basically means you're going to look at this current high. Whatever the high forms before the counter trend line, just like over here, here, and here, you're going to place your stop 15 pips above there. So if it's 13, 23, 28, okay? The expected risk, give or take, is going to be about 85 pips. Now, could be more, could be less, but we'll see if this sets up. Now, we like to go after 3 times our reward. So if we're willing to risk 85 pips, we want to make 255 pips in return. Reward will be 255 pips or 3 times the risk. The reason why we go after 3 times the risk is because you risk $1, you make $3. If you're willing to lose $100, be willing to make $300 per trade. Mathematically, if you place this trade 10 times, if you just win 3 out of 10, you're going to net profit, and that's important to your success. It really gives yourself strong competitive edge. 2.0606, 2.0606, 2.0606 is going to be the profit. Go ahead and type in, do me a favor, type in done, D-O-N-E, when you've copied this trade down. We suggest you do take a picture. There's a little camera button on the upper right-hand side. The neat thing about that is if this trade does set up, just take a look at your picture and compare it to the market and say, does it look like the picture? If it is, you probably have a good trade. If it looks nothing like it, you probably are forcing the trade. Go ahead and type in done, D-O-N-E. When you have it, we'll go ahead and take a look at another currency pair and make sure that you thoroughly walk away with some strong profits. To give you an idea, 255 pips at an average pip size of $10, that's 2,550 US dollars. This trade, if it sets up, should limit out next week. So this is a 2,500 US dollar trade for you next week. Question, did anyone trade the Fed interest rates? Did anyone trade the Fed interest rates last week? The neat thing about that last week, it was the first time the Feds increased the interest rates since 2008, and it was a 7-year anniversary. It was really neat about that. I hosted a session. We had well over 800 traders, and the neat thing about that is we were able to generate 673 pips off our positions. So at a standard position at 6,602 US dollars, We entered in at 2 p.m. when 2:01 when the announcement came out. We closed within 24 hours by the next day. Do me a favor, type in a yes if you thoroughly enjoy making over 600 pips or over 6,000 US dollars in 24 hours. Because our 800 investors who joined us in this session last week, that's what they're able to do. And the reason why I'm bringing this up is I'm not bringing this up because to say, look how great of a trader I am. It's to say, hey, look, the information that we're covering is the real deal. When I say, hey, there's 2,550 US dollars made here, it's the real deal. That's what we're currently doing. Okay, because I know there's active traders, let's do this. Let's try to squeeze in what? Maybe one or two, depending on time. But type in the question section box the currency pair that you want to look at. Doesn't matter. We'll apply the same methodology on here. Let's find another trading opportunity. Go ahead and type in the currency pair of your choice. Okay, Rich. What was it? IST was the first one, said pound NZD, GBP NZD, GBP NZD. Okay, that was the first one in, so let's go ahead and apply that. Now, Great British Pound NZD. Remember, if you don't know this routine, we do suggest that you do take notes along the way. The purpose of giving you this routine is to put you in a position of confidence, success, emotional control, and understanding the power of mentorship in regards to learning routines that work. Now, I really enjoy the monthly time frame, or I really enjoy the Great British Pound NZD quite a bit, and I'm going to explain to you why. But I want to make sure that I'm copying this information down. Monthly time frame equals direction. Okay, and we look for the direction because we want to find out where we should be trading long term. Specifically, we're looking for U-turns. We're looking for areas of future resistance. We're looking for areas of future support. And we're looking for D extensions, okay, Fibonacci D extensions to assist us. Nanda says, can this method work in stocks? We're a big believer in a chart is a chart in the chart. We do have many investors here that trade stocks, options, futures, and forex, and they apply the same methodology across the board. They love it. I'm sure that when it comes down to it, it's just finding direction. And every market's going to have a little different way of entering in, but Forex is pretty black and white. Think the market's going to go up, buy it. Think the market's going to go down, sell it. If you're wrong, you lose money. And then you have equity management concepts in between. But if you take a look at the pound NZD, one of the neat things about this is we have a very strong trend since 2001. We have the market forming highs at or near this downtrend line. And what this does is it builds a tremendous amount of confidence and identifying the U-turns or identifying overall market direction. Now, one of the neat things that we like is we like to utilize what's called a convergence, or more than one reason why the market will do something. Do me a favor, type in a yes if you can spatially see that the market formed equal lows on this red line, and we have also hit that red line at the same time of hitting this blue line. This is called a convergence, or more than one reason why the market will fall. This is the reason why the market's been falling, and this is the reason, actually the pound NZD is part of our prediction, and we've been selling this since the last 4 or 5 months. We're already up over a little bit 3,000 pips on this since the beginning, but it's coming to an end. Okay, so the monthly direction is down, pretty straightforward, right to the point. We don't sell this forever, never, never. We will look for the opposite end of the U-turn or the higher winning percent move. What I mean by that is this. If we take a look at this red line, we'll notice that we have another level of past resistance becoming future support. You have a high, you have a high, you have a high, you have a high, and that could equal our future low. The neat thing about this is this will put you in a position of directional trading until this market hits this red line, where you can understand that percentage-wise any upward movement would be viewed as short-term. Now, after this red line is hit, at this point in time, we don't know if the market's going to go up or if it's going to break through, but we don't really need to know that information right now because we're not looking to trade that far out. Write this target down if you can. 2.1043 is going to be the target. That's going to be this red level. We're selling because of the high, and we're looking to bring this down bearish toward red line. That's going to be worth what? 2.2117 minus current price point is 2.1043, 1,074 pips. 1,074 pips is equal to 10,740 US dollars with an average pip size of $10. On this currency pair, the pound NZD, it's about a $3,000 investment, give or take. But let me ask you this question. If all this presentation did for you was allow you to make $10,000 in the next 4 weeks, would you be happy with that? Yes or no? At the end of the day, if we provided the entry, the stop, and the limit, and you made $10,000 in the next 4 weeks, would this have been worth your time? Because that's what you have to be asking yourself in regards to any investment. Is the return worth your time? And is the money or the end goal, is it going to allow you to accomplish the things you want to accomplish? Many of you want to buy nicer things, live in a nicer house, drive nicer vehicles, provide support for your family, send money to or give money to charities. And you just have to ask yourself, is this the type of money that can allow you to do that? Some of you are just looking to retire. Some of you are looking for a supplemental income. It just really depends on what your goals are. Now, direction is down. We're searching for the market to fall, 2.1043. We need to identify whether or not this market is ready or not, okay? We need to identify whether we need to be waiting or whether we need to be trading, okay? So we're going to turn to the daily time frame, and we're just going to ask the simple question, are we moving from a high price to a low price, or are we moving from a low price to a high price? High price, low price. You tell me. We're just going to look at this current trend off the daily, and all I want you to say is high to low or low to high. What is this market currently doing? Are we moving from a high price to a low price, or are we moving from a low price to a high price? Yeah, Mark says high to low, Larry says high to low, Wayne says high to low. Yeah, we are moving from a high price to a low price. If it was opposite, if we were moving from a low price to a high price, swing traders, swing traders, position traders, we would be waiting. Scalpers, sure, you'll be trading. Some high-risk day traders will be trading, but if we were moving up, we would be waiting. But since we're now moving down, we're going to be trading. We're going to be utilizing our Fibonacci's to assist us and fine-tuning the target. We do have our auto Fibonacci's that let us know we have a wonderful down AB boundary. A is 2.4627, B is at 2.2419, C retracement around the 0.50, D extension 1.618. If you don't know what Fibonacci's are, that's completely fine. There are hidden levels of support and resistance, U-turns, where the markets like to gravitate towards, and a flood of buyers and sellers hang out there. Now, in regards to explaining you or teaching you Fibonacci's right now, I'm not going to be able to teach you. You only have like 20 minutes left, and I'll have to end this presentation. But you're just going to benefit from the end goal in mind, which is finding the target, finding the price point, and generating the profits if the trade fulfills itself. So, target, 2.1060. How much is that? Well, current price point is 2.2117 minus 2.1060. It's 1,057 pips. So there is 1,057 pips to be had, or 10,570 US dollars. Now, part of this routine is repetition. Part of this routine is understanding, okay, what this market is doing over and over and over again. Success is a formula. It's not a fantasy. If you're the type of trader that's used to scalping, then day trading, then swing trading, position trading, and you're not committing, 10 to 20 trades in a row to your strategy, and you're saying to yourself, I'm not making enough money, or I'm not consistent, I'm all over the board, that's probably the reason why. What you want to do is you want to repeat the successful habits that generate income, and you want to ignore the habits that don't. And it's very simple when you put it that way, but many traders are so focused in on just trying to make money that they forget how to do it. And so part of this routine is, once again, monthly time frame for direction, daily time frame to let us know, is it time to wait or is it time to trade? It's time to trade. Now we go to the 1 hour time frame to find small risk, because managing your risk is extremely important. Having small risk and large reward is what's going to assist you in generating consistent returns, or going through a drawdown and not having it wipe out your account. Okay. Now, in front of you, once again, this is the Great British Pound NZD 1 hour time frame, and once again, we're not really too focused in on using Fibonacci's on the 1 hour. We're not really too focused in on support and resistance or trend lines. We just want entries. We want to find high prices. If direction is down, we want high prices to sell. High price to sell. Okay. Now, I like to utilize counter trend line breaks to enter in selling. What that basically means is, when the market goes up, I just bring in a little blue line, and when the market breaks that blue line in the direction of my larger term target, I look to sell. Counter trend line break, counter trend line break, counter trend line break, counter trend line break, counter trend line break. Is every single entry a winner? No. But if you trade with a good equity management plan, risking $1 to make $3, you can absolutely generate a consistent profit. Mathematically, it just logically makes sense. But let me just ask you this. If you're a Forex trader, you're thinking about being a Forex trader, type in a yes if it logically makes sense to sell high in a downtrend. And to sell, and type in a yes if you can see that when the market breaks these counter trend lines, it's extending. There's a winner, 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 there's a winner. Okay? Thus far. Now, when you put it like this, everyone looks at it, they go, well, this is pretty simple, because it is. The only part that makes this difficult, realistically, is the waiting aspect for your entry. What I mean by that is, right now we're too low. We're too low to sell. What we need to do is we need to wait for a high price to form. We need to wait for the market to come up a little bit more. If it does, it may extend. Then we have to wait for the next pullback. But then wait to sell the next counter trend line break, because selling high and buying low is how you generate a profit. Buying low, selling high. It doesn't matter what you learn. It doesn't matter if you learn from me or somewhere else. You're just learning how to buy low and sell high. Very efficient. That's it. And hopefully learning disciplines to repeat those successes. Here's the entry. You may want to copy it down. Entry. Waiting for the market to pull back to a sell high price, then looking to sell high at a counter trend line break bearish. Stop. 15 pips above high of U-turn. One of the things in which we've discovered is, when you wait for these counter trend line breaks, usually you will have a lot of resistance or security, because the counter trend line will act as the resistance to protect you from a test, to where you're able to get away with placing a stop 15 or so pips above your high U-turn. And if your stop fails, it's probably because the market's going to go up and form like a Gartley or something. 617176, give or take area. So you're going to be at an expected risk of around 70 pips. And if you're risking 70 pips, your reward will be 3 times the risk. And so, therefore, your reward will be 210 pips. Time is flying. It's already 2 p.m. And we have 17 minutes left. Time is flying. So, let's go ahead and look at 210 pips. Is going to be 2.200, 2.200, 2.200, 2.200. Okay, do me a favor. Type in done, D-O-N-E, when you have this. This trade's going to be worth, trading an average pip size of $10, 2,100 US dollars. So basically, between the pound Australian dollar trade and the pound NZD trade, you got about $2,500 On the pound NZD, $2,100. On the pound, no, on the pound Aussie, $2,500. On the pound NZD, $2,100. So you have about $4,600. Let's just say you make $3,000 of this. Would you be happy making $3,000 next week if that's all you did? You just took these two trades. And let's just say you never follow through with the entire limit. Many of you do close out early, and you close out early making 300 pips or $3,000. Would you be happy? Have you learned anything thus far? Have you learned anything? Have you begun to see how we utilize larger time frames to build confidence? Do you see how routine is very important? Do you see how duplicating your successes is important? Do you see how when you turn on your charts and you need to have a clear-cut methodology and a game plan to say, hey, this is what I'm doing, this is how I'm going to make money today, this is my strategy, this is my formula, instead of, you see the big difference versus turning on your charts and saying, oh gosh, you know, what do I do? You know, what do I focus in on? Okay, so I only have 17 minutes left, but what I want to do is I do want to provide some social proof, which is always very important, and I do want to talk about what's called a Chiefs trading room. One of the neat things that we started to do this year at Market Traders Institute is we created a trading room, into where what we actually do is we provide all of the analysis, we provide all of the entries, all of the stops, and all of the limits, and we meet on a weekly basis with our students, and we provide them the video of the presentations, we provide them the snapshots of the trades, and we even give them our charts, and then we upload our analysis onto their charts, to where all the trader has to do is just say, I agree with the trade, and just place the trade. So let me ask this question. With 15 minutes left, do I have your permission to show you some track records? Do I have your permission to go over some details of that trading room and give you an opportunity to kind of see how we can do this for you? If we have your permission, do me a favor, type in a yes. I just want to make sure that everyone's on the same page. Hey, thank you, Larry. Thank you, Rob. Thank you, Hank. Thank you, Ken. If you learn, you know, tremendous about this routine, let me just show you what our track record could do for you. Now, we started this room in July, and what we've done is we've broken this up into a week-by-week breakdown. So you're going to see all of our wins and all of our losses. So you're going to see the true net gains. Okay, and this is called the FX Chiefs Trading Room. And what you're seeing here, this is what's called the FX Chiefs Trading Room Master Trade Sheet. And really quick, on the left-hand side, you see the currency pair. In the middle, you're going to see the entries are based off 2-hour time frames. On the upper right-hand side, you're going to see net pips. And then the upper left-hand side, you can see the week. I'm going to highlight the net pips. So do me a favor. Type in a yes into the question section box if you can see net pips, 1,572 pips. Okay, now remember, if you trade 10 cents a pip, which is a $20 investment on average, that's $157.20 for that week. If you trade a $200 investment or a mini lot on average, which is a dollar pip, is $1,572 for that week. If you're a big player and you trade standard positions or $2,000 to $3,000 investments per trade, every pip's worth $10. This is $15,720 US dollars. Okay, so let's go through this. I do have about 25 weeks worth of results to show you since we started this year in July. So everybody ready? So all I want you to do is just see the track record. I want you to envision yourself being provided trades like this. I want you to envision yourself utilizing this skill, learning this methodology, and seeing what it's like for a professional investor to do all of your homework, to do all of your work, and basically set everything up as well as teach it to you. Okay, so here we go. 1,572 pips, week number 1. Week number 2, 1,577 pips. Week number 3, 1,819 pips. Week number 4, 2,154 pips. So we're 4 weeks in, averaging over 1,500 pips of accurate net directional trading opportunities. Week number 5, 1,739 pips. Week number 6, 1,196 pips just for that week. Week number 7, 1,804 pips. Week number 8, 3,508 pips. Week number 9, 2,046 pips. Week number 10, 3,372 pips. We're going to take just a quick break on week number 10. Let me ask you a question. Type in WOW WOW if you think these are pretty good results thus far. Remember, every pips can be worth $1 at a mini lot. They can be worth $10 at a standard lot. Okay, so success is a formula, not a fantasy. This is what professional, real deal traders do. Okay, week number 11. Here we go. 1,862 pips. Week number 12. 2,388 pips. Week number 13. 3,640 pips. Week number 19. 1,625 pips. Excuse me. Week number 15. 1,347 pips. Week number 16, 478 pips. Week number 17, 1,824 pips. Week number 18, 1,727 pips. Week number 19, 1,014 pips. Week number 20 weeks thus far, 1,225 pips for this week. No losing weeks thus far. That's correct. Let's keep going. We won't have so much time. So week number 21, 985 pips. Week number 22, 1,395 pips. Type in a yes if you would like to learn this formula. Week number 13, 2,982 pips. Week number 24, excuse me, I'm losing count. 24. This was last week. 1,788 pips last week. This is a total of 45,067 pips of accurately predicted net trade plans since July. Now, as you can imagine, we have literally thousands of investors in this club simply because the results are the results. Many of these investors, this is completely changing their overall financial careers and overall financial lifetime. Financial life. They're becoming independently financially free. They're paying off their homes. They're retiring. They're putting their kids through school, and they are finally enjoying what it's like to be a winner as a trader because you have professionals who are doing all the homework for you. Put this into perspective. If you trade an average pip size of $10, it's $450,670 US. Do we have traders who already made over $400,000? Absolutely. I'm going to show you who those traders are. And I'm also going to show you what they provided us for testimonials. At just $1 a pip is $45,067 US. So let's just say you traded $1 a pip. Let me ask this simple question. For you, as an individual, just trading $1 a pip, would an extra $45,000 US in your bank account right now make a big difference for you? Yes or no? We're talking about since July. So we have July, August, September, October, November, December. So we're talking about 6 months. Would $45,000 in 6 months in your bank account right now change a few things for you financially? More importantly, would learning that life skill change a few things for you in 2016? Think about the compounding opportunities, the reinvestment opportunities. Think about making your own schedule. Success is a formula, not a fantasy, and this is our formula of success. These are individuals who are just like you. They were working extremely hard. They were out there searching for information. They gave us an opportunity to train them. They joined our room. Here's Samson, made 2,437 pips in a week. You know, with trading $10 a pip, that's over 24,000 US dollars in a single week. He actually takes a video of his trading count, which is really amazing. This is Jason S. Jason S. has 541 pips in a single week. Takes a picture of his trading count. He was trading with a mixture of mini lots and standards, and he made $4,300 in 1 week. It's really simple. This is what happens when a professional does your homework. Marcelo made 3,100 pips in a single month and gets her trading count or his trading count third-party verified and gives us a snapshot of the third-party verification. Ray, 563 pips in one single day. Linux, 415 pips, and literally it can go on and on and on. So before I end, because I only have 7 minutes, let me ask this question. Type in a yes if I have your permission to give you the details of the program, give you the details of the hours, give you the details of how you can join, and give you the details of how you can sign up right now. We do have a wonderful savings opportunity because we are part of this wonderful event that you can take advantage of this today. Okay, so here we go. Only 7 minutes and we can go. This is called the FX Chiefs Trading Rooms. Hands-on trading, mobile access, quicker learning equals quicker results. We're going to give you an entire month, 1 month of the trading room where you're going to interact with our Forex professionals online. You're going to receive step-by-step instructions. You're going to trade live for 2 full hours every Friday. We strategically do it on Friday, so then you have the entire weekend to review the trade setups as well as to review the videos. You're going to learn and understand a proven formula of success. We try our very best to keep the trades anywhere between 4 trades a week to 6 trades a week. And more importantly, you're going to receive results. Now, we just went over the master trade sheet, but you're going to receive a high-level view of easy-to-follow trade plans, what to focus in for the trading week, and results at your fingertips. We'll give you an entire month of our ultimate charting software. You're going to have auto-fib feature, which is patent pending, which means not available anywhere else in the world. You're going to be able to save your workspaces. We're going to give you our workspaces, so you're going to be able to upload all of our analysis, saving you time, energy, effort, and focusing on what's important as results. Draw king crown formations, basket trades, and absolutely you can trade from our charts. Analysts on demand, we're going to give you our workspaces, downloadable charting software, analysis done for you, and more importantly, this is a done-for-you program to where we do all your homework. All you have to do is say, yes, I agree, you're responsible for executing the trade. We're also going to give you what's called the FX Chiefs Elite, which means we're going to give you access for an entire week every single day to interact with Jared Martinez every single day, receive step-by-step instructions, trade live for 2 full hours every single day, learn and understand a proven formula of success, and every day receive potential results. Now, this is literally the best time to save and to get involved into this program. The reason why we're going to gear you up for 2016, we're going to put you in a position of extreme success, as well as you can start and you can join the room on Monday. Now, if you were to go through our program and you were to go to our website at marketers.com, everything I just showed you would cost you $4,199 US. But because Trade Thirsty gave us an opportunity to come on here today, what we're going to do is a 1-day savings and a 1-day opportunity to where you can receive this entire room and everything you just saw for just $500 US, saving you an additional $3,699 US. For those of you that would like to receive this information, for those of you that would like to join, what you can do is one of 2 things. Number 1, you can type your telephone number into the question section box. Later on today, I can have someone contact you. Or number 2, if you take a look at your question section box, I'm sending you a link. Go ahead and click on that link, and it'll give you the ability to sign up right now. Now, I do want to let everybody know that we are only going to give 20 investors the opportunity to receive the FX Chiefs Elite 1 week. So this means the first 20 traders will have the ability to join this room every single day. But let me ask you this question. And let's just talk about purely investment, return on the investment. How many of you will be willing to invest $500 to make $5,000 in the next 4 months? Yes or no? Type in yes or no. How many of you will be willing to invest $500 to learn a skill to where you can make $5,000 a month, month after month after month? Yes or no? Stop and really think about this. If all this package did for you was allow you to make $5,000 US month after month after month in 2016, would it be worth this $500 investment? If the answer is yes, what I encourage you to do is click on the link that I'm sending you right now, and it's going to bring you directly to this online sign-up page. It's 100% secure. You're going to see it's hosted by Market Traders Institute. You can see the FX Chiefs Trading Room, 1 month access, the CTR Elite, 1 week membership. This is only available to the first 20 traders to sign up. You receive the ultimate charting software. This is not a month-to-month subscription. This is just a one-time payment. And you can get started by filling out your billing information. And you can get started today by either American Express, Discover, MasterCard, Visa, credit card number, expiration date, security code. Once again, if you would like for us to contact you, what you can do is you can type your telephone number into the question section box right now, and I can have one of our education specialists reach out to you. There's going to be later on today. I want to go ahead and say thank you to the following traders. Thank you, Fred. Have your telephone number. Thank you, Fran. Thank you, Saram. Have your telephone number. Our education specialist will contact you here in about 30 or so minutes to answer any and all your questions. I also want to say thank you to